The stock of the day is Resmed, and I'll tell you why. First of all, I asked our viewers what they would like us to cover today. Look, we had a lot of great suggestions, but I went with Resmed because it was out with its quarterly to end last week. And even despite a pretty strong quarterly report, which Macquarie referenced, we've got Citi referencing how strong it is, Morgan's as well, we had just a really lackluster reaction to the quarterly update coming through, which did show 248 million US of profit. And this came to me, and this is actually stole it from Rudy Philippek van Dijk from FN Arena, another regular guest on the program. And this is a note from Wilson saying investors should take advantage while the market underestimates the permanence of what happened in the US sleep market over the past 12 months. Short-termism on the stock, bemoaning the gross margin impact of success, misses the point. Yes, because there was an adjusted fall in gross profit margin, mostly because of an unfavorable product mix and higher component costs. But it was partly offset by price. And I did speak with Mick Farrell, who's the CEO, and said that things are getting a lot easier on the supply front. And they expect to continue to be able to grow its market share around the US and rest of the world. Well, today we've got Resmed up by 6%. So I thought it would be good to ask our guests what they make of Resmed. And I will start with you, Francesco, because I do believe Ord Minnett has a view.
We do.
And it's an updated view in the wake of the result.
Look, we're positive on Resmed. We think... Well, let's start with just the business. Personally, I think it's a really good business. I was lucky enough to have a site visit at their campus at Bella Vista in Sydney a couple of years ago. What really impressed me was the ability for the company to take their ideas from the engineers down to the factory floor, and the incentives that they put in place for their people on the factory floor as well. It's a great industry. It's a growing industry. It's sleep apnea is I suppose a condition where people, if they treat it early, it reduces other conditions that might come as a result of that. So I think the medical fraternity and people that have the condition are starting to realise that they need to look after themselves when they're asleep as well as when they're awake. So love the business, love the industry. With Resmed, it always comes down to the valuation. I think that there's good value in it at the moment, although I haven't had a close look at it this morning. With the share price up that strong, it obviously pushes a number of the fundamentals around. The result that came out last week, normally when Resmed put out a result and we see the margins decline, we normally see a bit of sell-off in the stock. Both the top line numbers were actually better than expected, so I think the market's looking past those margins and going, well, we can see down the track that those margins could improve. So look, we like the stock. I'm happy buying the stock. Need to have a closer look at the numbers after a 6% rise, but we're very positive on the company.
Yeah, an upgrade to accumulate from a hold. Citi has a buy. We've got Macquarie with an outperform. We've got Morgan's with an add. Daniel Ortisi from Lincoln Indicators. What do you think?
Yeah, it's been one of our key picks and a stock we've been really positive on as well. Obviously, Francesco just covered the story really well and the result well too. Effectively, what we've been looking for specifically in the short term within the market are stocks that we believe are probably if not the competitive leader, then one of the competitive leaders in their field, and also have some form of underlying earnings tailwind, and Resmed have been ticking that box for quite a long time. So we've been very, very positive on the stock leading into the result, and yeah, fortunately it was a cracker result. Just similar comment on that Wilson note. You did have a gross profit margin underperformance due to the sales mix. So device revenue was a little bit stronger than consumables revenue, but obviously device revenue is a form of leading indicator into future consumable sales. So we don't think that's too much of a negative. In fact, that's probably why the stock has opened up pretty strongly today, because that would have been well digested in the US and well understood. We're probably a little bit more negative on initial results in Australia than the US are. So I think that's one aspect of the stock as well, which leads to future performance. Obviously, we really rate highly. So yeah, it's a great stock, and it does give you opportunities to buy it at lower prices. So if you don't own it now, certainly keep it on the watch list, because when it does pull back, it's a fantastic business for the long run.
So you are not buying today because you reckon you could get it cheaper?
Well, we've been buying it pretty pretty positive on it in the lead up. So I don't think we'd be calling it a buy right now. But like I mentioned, this stock will give you an opportunity to get in at a cheaper price, because it's not a 6-month story. It's an industry with a very long-term tailwind, and they're very clearly the industry leader. And I think that Philips recall story will probably take longer than most people have expected, and it's actually been delayed multiple times now. So it's a story that will have growth for many years.
Yeah, it's particularly because once you buy one of these machines and you get into the cloud, and it's difficult, or why would you sort of change just because Philips got its act together? All right, so we will not be able to call that a double buy though, because Daniel would like to get it a little bit cheaper. Let's get to